Welcome back to the Canadian Virtual Sell Your Business Conference. My name is Marc Belaiche. I'm president of TorontoJobs.ca. We've had such a great hour and a half of content. So many great speakers, so much great information that has been shared over the last hour and a half or so. We have half an hour left, and we are in the final stretch with the panel. So Melanie Russell is president of Kalex Valuations. Melanie, thanks very much for being on. We've known each other for quite a while now, and you've been on some of our other events as well. So thanks again for sharing. So why don't you talk a little bit about Kalex and yourself and your background and how that ties into companies that are looking to sell their business?
Sure. Thanks for inviting me, by the way, Marc. I'm happy to be on the panel. So I'm Melanie Russell. My background is an accountant and a business valuator. So I run a firm called Kalex Valuations, and we focus on business valuations for various purposes. And I'll kind of generally say they're in the planning stage, the execution stage, and then at the end where things are maybe not going right or need to have a check. So we often get involved in valuations when someone's planning or they're structuring and they're anticipating selling at some point. Or if they're looking to sell, they might need some guidance on pricing or structuring. So we'll get involved in there. Financial reporting issues where the deal is actually done and the accountants have to account for the deal and allocate it out to the various intangibles. We might also do quality. We also do quality of earnings reports as part of diligence and other financial diligence. And then sometimes on the way out, or someone's trying to plan setting up a shareholders agreement, or there's a dispute on the shareholder side and there may need valuation on the shareholders agreement, for example, or damages. So broad base of valuation work.
Okay, and any particular industry that you might focus on or size of company?
No, I mean, it's an overly overused term, but definitely industry agnostic. We certainly focus on, we have some larger clients, but we also we primarily focus on mid-size and small companies.
Okay, terrific. Next up is Bruce Singer, CEO and founder of Canada CFOs Inc. Bruce sold his business a couple of years ago and is now in the Canada CFOs industry. So Bruce, why don't you share a little bit about your background, what you've been doing as well with Canada CFOs, and your experience in selling your business as well.
Marc, first, thank you for inviting me to the panel. Much appreciated. I'll start with I've been in the recruiting and staffing industry for over 25 years. And I did sell my first company called P2C Accounting. And then this is my new venture called Canada CFOs. What Canada CFO does is provide, fractional interim and also board members for your company. Most of our clients tend to be small and mid-sized businesses. That's the area we service. And we recruit, and that's what we do. Our motto is, if you're looking for a top-performing CFO, we provide only the top performing. We call it the top 10%. That is how we do it. We believe in very high quality and very stringent rules and recruiting rules and processes. And that's what we do. That's right. We also provide boards and boards of directors. We also work in the non-for-profit space, although not related here, but I want to mention, for non-for-profits, if they need a board member, that recruitment service is actually for free. We do it as a way of giving back. Okay? In terms of buying and selling a business, a lot of times a company might need a CFO type of person to help them prepare certain information and help them do a lot of work before it gets to the point of sale. Because sometimes the entrepreneur, no insult intended, is not financially savvy. And the CFO prepares records, compiles records that can really, really help them. And that's what we do. And I'm pleased to be here. And if you need information, please reach out to me. And I spent quite a bit of time at the beginning up front to make sure I understand the needs about the company and to make sure we do it right. Because some people think they need a CFO, but necessarily don't need a CFO. And I'm pretty good like that. Yeah.
Sure. Well, thanks, Bruce, for being on. We're going to cover a lot more over the next 25 minutes or so. Eric Percy is Head of Acquisitions North America for Lynx Equity. Thanks, Eric, for being on. And perhaps you can do the same, give a profile of yourself and Lynx as well and what you do.
Yeah, thanks for having me last minute here, Marc. But happy to be here regardless. Lynx Equity specializes in acquiring small, medium-sized businesses from retiring owners. I've been here for 6 years now, leading up the M&A team, focusing on North America. But yeah, our focus, as I said, is on retiring owners, businesses that are generating anywhere from 500,000 to 3 million of EBITDA. And we find that we can be, to use Melanie's term, I hadn't heard that one before, but industry agnostic, by focusing on the size of the business and that being the commonality between the companies, because we find that companies of that size face a lot of similar challenges, whether it's an HR standpoint, an accounting standpoint, sales strategy, whatever it may be, they face similar challenges because of their size. And so we've kind of carved out this little niche for ourselves, acquiring these businesses without a set succession plan, someone to lead the company to, please buy the business. And that's where we step in.
Okay, great. And do they end up, so they retire within a year or two? Is that the plan? And what happens then? Do you bring in your own person?
Yeah, so we typically require a 1 to 3 year transition period from the sellers. We like to hire from within if there is a clear number two in place or someone that could step into the shoes of the seller over a 1 to 3 year type of training period. If that person is not present, then we try to go into our pool of other companies that we do have, because I forgot to mention, we do have a buy and hold strategy, which isn't always common in the private equity place, but we have 50 businesses right now. So we can pull from talent within the portfolio group, but if not, then we do have to go externally, put that person in place with a fair bit of time remaining in the seller's transition and get them trained up to be the president of that business after for us.
Great. So it's a good opportunity for people looking to sell to reach out to you. And so coming back to Bruce, your business you sold to a private equity type arrangement, right? Yep. So what were your positive takeaways from that process?
Well, the positive takeaway is I learned a lot. Okay, I mean, I actually learned what to do, what not to do. That's a positive takeaway. And the positive thing was I was ready to sell the business. So it ended up being a positive outcome. And the other positive outcome was I got quite a bit of stock, and the stock is actually gone like so there's a positive financial gain on it's all learning experiences really. And what I learned, one of the main things I learned is we kind of rushed through the process, not because we wanted to, because we had a buyer at the time which approached us and we had to move quickly. I don't recommend that. I think you need to plan way in advance and really, you got to talk to people like Melanie Russell and Eric, and plan ahead. Don't wait till you're going to sell like in 90 days, or it's not the way to do it. So I learned, there's a lot of things that I learned. And one of the things was having a good team of advisors and professionals around you that can help you really guide you through the process. Because I'm an entrepreneur. I wasn't an expert at valuations or an expert at these kinds of things, right? And so it's just the learning experiences that I really picked up on. But I recommend a strong team, I call it a dream team of advisors. That to me is really, really critical.
And who else? So you got Melanie on your team of advisors. Who else? A lawyer?
In my opinion, Melanie would be someone on my team. A lawyer would be someone on my team. Melanie could play a role. Usually my accountant would be on that team. Plus, I want to add someone else that I would have had on my team is somebody who maybe was another entrepreneur that went through this. In other words, you want to get, not everybody has the same thing, but you want to get information from a different lens. Okay, and an entrepreneur who went through this could bring a different lens to the mix. That's all it is, just different lenses. So you make decisions that are really, really sound and really, not knee jerk, and you don't want to really learn everything as you go. So these people, or these professionals, they have insights and they can really help you, and it's worth it. It's worth every penny.
Great.
Could I quickly add something to Bruce's point?
Sure.
Yeah, we actually always encourage sellers, once we get to a certain point through the negotiation process, to just pick from any one of our companies, or pick 10 people from the companies that we've acquired, to speak to those sellers, to get an understanding of what the process looks like, what they can expect, what to look out for, what to prepare for, just to get them ready. I'm glad you mentioned that, because that's something that we always try to encourage people. And some people don't take us up on that, and they're asking us questions the whole way through that they would have got at the beginning. They would have spoken to someone, and it's fine. We were happy to answer those questions, but they're just a little more anxious and a little more unprepared.
Of course.
For an event that you should be as prepared as you can for.
Well, if I'm guilty of something, and I'm an entrepreneur, and sometimes as entrepreneurs, and no disrespect to everybody here, we tend to sometimes be a bit of a know-it-all. Okay, that is a big mistake. So yeah, sometimes you got to take your ego out of your mind and say, okay, this is not my area of expertise, and work forward. And sometimes we all learn from our mistakes. And I did a lot of good things, but sometimes I had a bit of a know-it-all attitude, and that's not going to cut it. So I share your sentiments, absolutely, Eric.
Thanks very much. So if you're just joining, my name is Marc Belaiche. I'm president of TorontoJobs.ca, joined by Eric Percy, head of acquisitions North America for Lynx Equity. Bruce Singer is CEO, founder of Canada CFOs Inc., and Melanie Russell is president of Kalex Valuations. So over to you, Melanie. When is the right time? When would you suggest somebody get a valuation? They're thinking about selling their business. Maybe it's a year, maybe it's 2 years, 5 years. Is it as soon as they think about it? Is it a year before they're ready to list? So list, quote unquote. Like when would you recommend?
Well, I think it's, I'll say generally as early as possible, because often the valuation is usually the starting point. Because when entrepreneurs, and Bruce may have known what his company was worth, but many entrepreneurs aren't really in tune with what the market will pay. So that's the advantage, as Bruce talks about bringing in a team, and maybe making sure everyone's more well-grounded. But the earlier on you get a valuation, that helps dictate or help make a decision. A, is it really time to sell, or do I have some work to do? Because what Melanie says the value is not going to help me with my lifestyle once I retire. So it's just not going to work. It also helps dictate the possible, maybe some structuring or some planning ahead of time. And I see it in a little transaction I'm helping out with now. The vendor did not organize upfront, right? So now he's selling, but had he organized a little early on and got his ducks in a row, he probably could have split the, he could have gone into various structuring and made it a much more tax efficient transaction ultimately. So I think in general, the earlier the better. And sometimes it's just it's reinforcement to the entrepreneur that they're doing the right thing. They're on the right path. And if I choose to sell in a year, here's what I might get, but maybe I keep going for another 5 years, and I'm going to significantly increase what I'm ultimately going to get.
Excellent. And Eric, you talk to entrepreneurs, owners that are looking to sell. What mistakes do you see them making?
In terms of what? Can you clarify a little bit?
Well, just their expectations of how much their business is worth is higher than what the market might pay, or maybe they're not unprepared. Maybe they don't have their documents ready. They're not mentally ready to sell. Really, think of a business owner that you might be speaking with, and the deal doesn't go through, and hear maybe some of the reasons why it doesn't, perhaps.
For sure. Yeah, I think definitely being unprepared is a big one, where sellers don't have information that any buyer is going to ask for. They don't have it readily accessible, or it's not in a fairly acceptable format. I would say, unrealistic expectations, not speaking to someone like Melanie to understand what you can be expecting for your business. That is a huge one, because a lot of sellers look back at the work that they've put into their business, and they start valuing things in a very unique and what we'll call a creative way. And they're expecting a certain price based on that creative calculation, and 99% of buyers in the market won't look at it that way. In fact, 99% of buyers will look at it one specific way, and people like Melanie, I'm sure, can walk sellers through what that looks like. Not being represented by a broker, I will say, at times can be a mistake, because you are shouldering the massive task of negotiation and due diligence all on yourself. And sometimes it really is on that individual seller. Sometimes the seller doesn't even loop in a controller or a manager that's also within the business, because they don't want the secret getting out there yet, or that they're selling. And so they really are trying to do it alone. In those types of instances where you are trying to keep things a secret, but you're trying to sell, I would 100% say to engage with a broker or some kind of sell-side advisor, because it is going to be nearly impossible to get a deal done in a efficient and timely manner, because you're trying to do it all yourself while also having your regular day job, right? So unrealistic expectations, not having the help, and not preparing, I would say, are three of the biggest mistakes.
Great. And real quick, is there numbers about what the deal looks like? If you percentage wise, we're on a very high level perspective, cash only, stock only, earn out, like any kind of percentages as to what generally deals look like for small to medium sized businesses?
Yeah, it can really vary. Depends if what kind of financing is available. If bank financing is available, if someone is banks at the table that's interested in financing the deal, the cash at close component can be, we see anywhere from 60 to 90% cash at close. If the bank is not willing to do a financing, then we typically have to go into our traditional sources, and that cash at close tends to start to go a bit lower, 40 to 60% cash at close. But that also can vary depending on what the multiple is. We're very flexible with our terms in that, if you want a very, very high multiple, but you're willing to stay around for 3 to 4 years even, and the cash at close is a little less important, well, we can give you a higher multiple if you trade and give lower, or allow us to pay lower cash at close. I will say a new change for us is, because of the pandemic, we've been structuring our deferred payment as an earnout almost all the time now, where before it was a bit more rare. A lot of our deferred payments are earnouts now, whereas in the past they were structured just as a fixed seller's note. But yeah, that's what sellers can expect from us, at least. But every buyer is different, because we are more of a financial buyer as opposed to a strategic buyer. That's what our structure looks like. But some strategic buyers will come in with 100% cash offerings. It's a different type of acquisition. It's important to distinguish that there is a difference.
I just wanted to build on one thing that Eric said, a good point about a broker, or maybe I'll call them the M&A advisors, how important they are. And that's probably something that Bruce would have had on his team as well. Because not only are you preventing, or an M&A advisor will help the entrepreneur continue on building the business and keep focused on the business rather than getting distracted, but also they will for sure get you a higher price, because they'll know where to go to. They'll know who's paying the right prices, know who's looking for this type of business. So I think an M&A advisor is really important. And I think there were a few of them that spoke today that would be definitely helpful on a team.
Can I add to that too?
Yeah.
Okay. Just the word broker. sometimes the word broker is there's M&A advisors and brokers. Like, I want to make sure we know what a broker is like. Is a broker is going to broker the deal, and sometimes they get a performance fee for doing it. Okay, is that your definition of a broker, Eric? Because that's what I'm thinking a broker is. You know?
Yeah, they come in different forms.
Yeah.
They are a more holistic M&A advisor at times, and other times they really are just brokering the deal, okay. And the seller has their own kind of group of advisors behind them, or sometimes they don't. Okay. So it can come in different forms.
I want to comment on that because you got to be very careful. Again, I learned we all learn from experience. Is you got to get the right broker, because sometimes, depending on how small your company is, if your company is what they consider to be very small, they won't give it the time of day. Okay, and just because you're small doesn't mean you can't walk away with a few million. But they want to focus on that 10 million of EBITDA, 15 million of EBITDA. And sometimes you really have to go like an advisor route and engage a broker. You just got to be really careful. That's a whole problem. We could probably have a whole web panel on that, you know, because I've seen some brokers, they raise expectations. And I had a company, I was going to buy a business too. And the broker was way out to lunch, advising his client on some amount that was just insane, and he'll never sell the business at that kind of multiple he was asking for. So you got to really find the right broker. And again, it's the referral system. You know, I just wanted to add to that. You know, it's just, I agree with everything you said, but a bad broker can really do a lot of damage. You know what I mean? If they're, I call the word self-serving type of broker. Mm-hmm. Yeah.
If you have any questions for anybody on the panel you're watching, feel free to put them in the event. We've got a few minutes left, so if you have any questions, you can ask away. Melanie, working with brokers, your experience, you touched on it already, but any other comments for that business owner who's looking maybe out for a broker? Your experience, good, bad, or otherwise?
I would say look for an M&A advisor or a team. Just as Bruce says, the broker and some people may call themselves brokers are really advisors, but be careful of that because it's really the advisor you need. So more a holistic or a team effort, and someone that's not just going to try to get the biggest commission possible. So someone who will manage the process. And
how would you go out and find somebody? Google, referral, lawyers, accountant, like
referrals for sure. But yeah, talk to the trusted advisor for most entrepreneurs is their accountant, the first line of approach. So, and the accountants are often able to connect, like they know a lot of people. So good, start with your corporate accountant, go talk to your corporate lawyer as well. And just recognize that your team, you may have a good team for what you have now, but if you're going to do something like selling a business that's very different than managing the business day to day, you probably need a different group of people, but supported by your existing team. So just recognize you may not be able to use all of the same professionals to the same extent, but you still need them on your team to help through the process.
Right. And Eric, question for you is how long, from the time that you meet somebody who's looking to retire, looking to sell their business to the time that a deal's made, on average, out of the 50 deals, what's the average amount of time? What's maybe the shortest? What's the longest as well?
Yeah, it's a very good question because it brings up some very important points. Before I get to that, I'll just add to Melanie's point of, ask your trusted advisors, ask your accountant, ask your lawyers. I would just go one step further to say, ask those accountants and those lawyers for access to maybe a transactional lawyer or a transactional accounting team, because then they might be able to lead you to that specific M&A advisor or be able to do it themselves. So that's just one extra piece there. But to your question about timing, it can take anywhere from 2 to 12 months. And it's a big range for one very important factor that I kind of mentioned previously, which is about being prepared and having the right help. We go through some grueling transactions where, it is a 12-month process because it takes a month to get certain things from the seller because they are doing it themselves. and they're not the one that works in the bookkeeping system on a regular basis. They aren't the one that are dealing with certain contracts on a daily basis, and so it takes a long time for them to, one, get them from the right people, and two, if they're trying to do it sneakily through the backdoor approach, it's going to take forever. So that the timing of the transaction will almost always depend on the preparedness and the quality of the current data that the company has at hand. Those 2 to 3 month transactions are almost always with a M&A advisory team involved, good transactional lawyers on the seller's legal team, and having excellent quality data at their fingertips that they can pull from. That's what makes a quick transaction. You don't have those three things, it can be anywhere from 4 to 12 months in length.
Good to know. Awesome. So we have a quick question. Sorry, Bruce, let me just get this question in.
Add something. Okay.
Yeah, go ahead, Bruce, real quick.
Okay. By the way, you mentioned something. You made two things. You mentioned something about data. I can tell you what I've seen from again is deals coming back where the numbers didn't reflect the story that was sold over the course of the transaction, and the whole deal blows up in everybody's face. Okay, I'm going to give myself a plug. You got to have high trust in the numbers. Okay, and don't be penny wise, pound foolish, because if you don't, and I see this all the time, penny wise, pound foolish, and we don't want to spend the money, but it will cost you so much more in taxes. Not the numbers don't reflect the proper story. Like there's stories that I can share, not today, but stuff that's done, and it deals end up blowing up because the buyer thinks he's walking into a case, does his due diligence, and turns out EBITDA is not right by $400,000 or $500,000.
If we have a hard time trusting the numbers, we don't do the deal. Even at the outset, if we're having a hard time getting quality information, particularly around the numbers, we walk away from the deal even before we start negotiations. That happens all the time.
But the seller might not know, because they don't know what they don't know. The seller might not know the numbers. He thinks he trusts numbers, but they really don't. So sometimes he needs someone to come in, almost like a person. It doesn't have to be my company, anybody, to come in and do their own pre-due diligence and say these numbers. Anyways, just want to
quality. That's what a quality of earnings report helps out with. And thinking about, so another thing in planning early to sell is to get everything cleaned up and not get away from focusing on minimizing taxes for CRA purposes, because it's not going to be that easy to convince a purchaser that, well, here's what the numbers show, but really there's something else. Because not only do they may not have the documents or the ability to get comfortable, but it's also an issue of trust and reliability. And it's, if you're going to lie here, or not lie, but if you're going to bend the truth over here, how else are you going to bend the truth here?
Absolutely.
And what am I thinking on when I acquire it? So
absolutely. And the big money is in the exit, not in saving the taxes.
Perfect. Okay, we're out of time. I know Masood, I wanted to get your question. Masood wanted to know, how do you search for the companies that may be interested in buying you, or those who can be a prospect for you to take over? So perhaps, Masood, you might want to reach out to Eric, perhaps. You can connect with me as well. I can certainly connect you with people as well. I want to thank everybody for being here at the Canadian Virtual Sell Your Business Conference. Great information, great takeaways, lots of good information. Every time we do these, always find out getting more information on and learning every time. So today's event presented by TorontoJobs.ca and TorontoEntrepreneurs.ca, powered by Event Logic with a K.ca. My name is Marc Belaiche. I'm president of TorontoJobs.ca. The panelists: Melanie Russell, president of Kalex Valuations; Bruce Singer, CEO, founder, Canada CFOs Inc., and Eric Percy, head of acquisitions, North America, Lynx Equity. How did you like the event? Let us know. We'll send you a survey to complete after the event. I want to thank everybody on the team behind the scenes: Alex, Rachel, Ann, Sandra, Sarah, Carla. A lot of people to put this event together. As far as exhibitors and sponsors go, if you have any staffing needs, feel free to connect with TorontoJobs.ca. You can email sales@TorontoJobs.ca. TorontoEntrepreneurs.ca if you are an entrepreneur, business owner, you want to connect at one of our upcoming events. RobinX as one of our sponsors today, business brokers specializing in helping owners of mid-sized businesses with all transition and succession planning needs. Visit robinx.com, Robinx with 2 B's. Action Coach Business Coaching. Their systematic business coaching methods help entrepreneurs and owners overcome the challenges in maintaining a business. Bandu Law Professional Corporation. They know HR law. Their sole focus is employment and labor law. TE Capital. Did you know that over 70% of small and medium-sized businesses don't sell? Visit tecapital.ca to let the team help you. And eventlogic.ca if you'd like to sponsor, exhibit at, or speak at an upcoming event. Visit the website. And we got lots of great upcoming events. You'll be getting links through the thank you messages as well. The Canadian Virtual CFO Conference happens Tuesday, May 11th. There's the Canadian Virtual Presidents Conference happens Thursday, June 24th, just as a very small example. And I feel free to connect with me on LinkedIn if there's anything I can help you out with. And finally, want to stay safe. By the way, if you're interested in buying a small CPA firm, feel free to reach out to me. It can be handled virtually as well. We do tack another 10 minutes to this event, so you still have some time to network through our speed networking, visit our expo, and more. Again, thank you to the panel. Thanks to everybody who came, and look forward to seeing you at the next time, and stay safe.
Bye, everyone.
Thank you, guys. Thank you, everybody. Thank you.
Bye.
Thank you, everybody.